Non-dom or non-domiciliary taxation, what does it actually mean, and what are the advantages if you are a non-dom tax individual for UK tax purposes? What are the disadvantages for the UK establishment, and what has Jeremy Hunt, the UK Chancellor, recently just come out with regards to non-dom taxation? Stay with me, and I'm going to break this one down. So here on screen you can see an article written by City AM, Hunt molds change in non-dom tax breaks for autumn fiscal statement. So we know the autumn fiscal statement is approaching, it's coming up on the November the 17th, and the Chancellor has reportedly tasked officials on the Treasury's high net worth individuals policy team to look at ways to cut down on tax breaks for non-doms as the government looks to raise, as we know, there's this big fiscal deficit of £50 billion. And such a measure could raise almost £2 billion in tax revenues. So yeah, it could be 2 out of the 50 or 2 out of 25 if 50% is going to be plugged by tax revenue. And obviously one of the most highest profile cases this year, at least, that's taken place is that of the wife of the Prime Minister Rishi Sunak, Akshata Murty, who benefited from non-dom status until she renounced it earlier this year amid controversy. But the question is, what is non-dom status, and how have people like Akshata really benefited from it? So what exactly are the benefits for people like Akshata who are non-domiciled in the UK for tax purposes? Well, Akshata is UK tax resident. She is resident here for tax purposes, but obviously her domiciliary is elsewhere. It's in India. Now, as a result, all her non-UK income and capital gains are not subject to UK tax laws or UK tax, whether it's income tax or capital gains tax, so long as she does not remit the funds, that is actually whatever funds she's got from those dividends in India or any capital gains from selling property, shares, whatever it may be, are not remitted back to the UK, that is physically put into a UK bank account, then she pays no UK tax. So in contrast, let's say somebody like myself, I am UK tax resident and I'm domiciled, probably like most of you, and what would happen here in this situation is if I got those dividends from India or any capital gains, that whether I remit them or not, I can keep them in India or any other country around the world, non-UK country, then actually I'm still liable to UK tax on my worldwide income and my worldwide gains. There's the difference. So what does it mean to be domiciled in the UK? Well, the domiciliary concept is right. It's quite an ancient relic from colonialism. Basically, it allowed the wealthy elite under sort of the British Empire, who are, let's say, in places like India or other colonies, who would have rich plantations or tea plantations or whatever businesses, and it would allow them to avoid British taxes from those overseas income. So that's now continued, and there's a big argument and debate now that, you know, it's a very outdated concept in the sense that, well, hang about, if you are UK resident, that means you are here in the UK, you're enjoying, you know, the infrastructure, the services that you get, all the things that the tax money pays for, but yet you're not paying the same amount of tax as those of us who are domiciled. So that is the key argument here. And like myself, my domiciliary status arose from the fact that I was born in the UK, came from my father's origins and roots, that the fact that my father his permanent abode was here in the UK, establishment here in the UK, and laid down his roots. And I did the same as I was growing up. I've had a family here, kids here. I've spent at least 15 out of the last 20 years here as tax resident. So therefore my domiciliary is clearly and firmly here in the UK. But what about somebody who is not UK domiciled or born and bred here, like myself, for example, and have come from places like India and they've come here? Well, basically they've got to establish that their intent at least is going to be to lay down their roots here, that they're going to make this their permanent abode, establishment, they're looking to start a family, whatever it may be, in order to get UK domiciliary status and to renounce domiciliary status of the other country. There can be something of a paradox with the UK resident non-dom status. We know that non-UK overseas income, dividends and capital gains escape UK taxes if not remitted, but in some cases and instances, there is a possibility that the country in which the overseas income, dividends or capital gain arises could levy tax on it. The most effective strategy for non-doms is to have their assets or income arising in a low or tax haven jurisdiction. So no doubt we shall wait and see on November the 17th as to what Jeremy Hunt does with the non-dom status and whether he can raise more tax revenue from this particular tax loophole. As always, I hope this video has provided some insights, some golden nuggets and added value to you. Please like, subscribe and the bell notification icon is useful. Until the next video, please keep well.